Chancellor Rachel Reeves is reportedly preparing a series of tax changes for her upcoming autumn budget, with a particular focus on dividend income. Sources suggest Treasury officials have drafted several proposals aimed at raising tens of billions in revenue to plug a growing fiscal gap, potentially as high as £30 billion. One key measure under consideration is scrapping the current £500 tax-free allowance on dividend income, or increasing the top dividend tax rate, currently at 39%. Removing the allowance alone could generate over £300 million. This move would allow Reeves to maintain Labour's election promise not to raise taxes on working people while still boosting revenues. Critics, however, argue the proposals are a direct hit on taxpayers and businesses. The Conservatives have accused Reeves of dipping into the pockets of the British public, especially after a leaked memo from Deputy Prime Minister Angela Rayner suggested raising up to £4 billion through various tax hikes. Also under review is the bank surcharge, a tax on top of the existing 25% corporation tax. Reeves could raise it from 3% to 8%, its pre-2023 level, or settle somewhere in between. With April's GDP data showing a 0.3% economic contraction, the pressure is mounting. Treasury officials routinely draft a range of fiscal options ahead of each budget, but this latest dossier of possible tax increases has not been denied by government sources. Chief Secretary to the Treasury Darren Jones declined to rule out further tax rises, saying decisions would be guided by official forecasts and handled in an orderly way. Meanwhile, Shadow Chancellor Mel Stride criticised the government's approach, claiming it shows they've lost control of the economy. He warned that Reeves could return with more tax hikes later this year, despite earlier promises to the contrary. As speculation continues, all eyes are on the autumn budget to see how far Reeves will go in her search for new revenue. Thanks for watching. See you in the next one.